Okay, so it's time for strategy 3, probably one of my favorite strategies. They're all great. I love them all. But this one has the most confirmation out of them all. Um, it's a very clean strategy, and it will be, again, a very common one. Out of 100 trades, you could probably expect about 30 of them to potentially beat this strategy. Um, so CBO stands for the complete breakout because it had a full breakout. And what do we mean by the full breakout? In addition to the 1 hour 50 EMA, it also broke the 4 hour 50 EMA. You know, whereas with the IBO, we're trading the break and retest of the 1 hour 50 and we're targeting the 4 hour 50. Right. In this case, both 1 hour 50 and the 4 hour 50 EMA were broken. Right. So we're not targeting the 4 hour 50, it's a break and retest of both 1 hour and 4 hour 50 EMA. Right? And we're trying to capture either wave 3 run or wave 5 run. Whereas with the IBO, it's only ever wave 3 run. You know, we had a wave 1 breakout, wave 2 pullback, we're trying to capture wave 3. Now with CBOs, it will be the same. Wave 1 breakout, wave 2 pullback, trying to capture wave 3. But sometimes IBO happens, wave 3, and it breaks out into wave 3, and then wave 4 pullback, and we're trying to capture the wave 5. Right, so you still need a rejection of major / minor support and resistance on a higher time frame. That's always required. Wave 1 breakout on a lower time frame obviously will be there. Trend change on a lower time frame will obviously be there. This is a complete breakout, so all of this will be there. There will be a rejection. There will be a wave 1 breakout. There will be a trend change on a lower time frame. All of it will be there when the complete breakout is present. Right, and as I have here in my notes, break and retest of 1 hour 50 EMA and 4 hour 50 EMA / 1 hour 200 EMA is relatively the same level. Daily pivot and 0.3 to Fibonacci retracement. All of those, right? Whereas with the IBO, it just excluded the 4 hour 50 and 1 hour 200 EMA. Everything else was present. Entry will be the same as IBOs. Target will be relatively similar. Target placement and stop placement is the same as IBOs, 0.618 fib. So let's dive into an example. I'm going to have a few additional examples here. This is a wave 3 run. This one right there. So this is a wave 3 run. And what is up? My bad. There we go. This is a wave 3 run. And yeah, this is like that example where it breaks both the 50 EMA and the 200 EMA. See that? So now you have that 200 EMA as support. This is really cool when this happens. These are really clean setups. Pretty much like perfection on a lot of these. And you can see obviously on a break and retest of that too. Right? And direction prediction at that point is typically very fucking clear. Very obvious. It's definitely like running. It's definitely moving. Because it had that full kind of complete breakout of all of it, you know? So that's the characteristic. It's just gonna have that full fucking breakout. So that's the wave 3. Now, a wave 5 CBO will look something like this. Again, it will be fully confirmed on a daily chart, like it's already moving up. Whereas the IBO will potentially be happening here. This is already fucking moved. You know, so the CBO typically happens a little bit like more into that move. You have more confirmation on a daily chart. It's definitely like the direction prediction is obvious and it should be obvious, right? Now the 1 hour chart here, you can see that it was in a pattern, kind of a range, broke out into an IBO, you know, and had an IBO there. Then it went into wave 3 run and then it pulled back and kind of retested all those levels. Now it's not always perfect. In this case, you can see all this stuff is a little bit wider, you know, pulled back a little bit farther. So entry was a little bit better. Stop loss needed to be quite farther than 0.618 to protect it, you know, so it's not always nice and pretty, nice and tight. Sometimes the levels are a little bit wider and that's fine. We got to treat them as a zone, as a support or resistance zone, you know. And I have one more before we dive into the drawings. You know, so this was again wave 1 breakdown, had an IBO right here, It ran into wave 3, then I had a wave 4 pullback, and now we're trying to capture wave 5. You see in this one again, pulled back a little bit farther. Pivot 0.382 is here. And that's not really value. There's a lot of levels up there, and that's kind of where the 4-hour 50 EMA is. So sometimes we want to be waiting for that bigger pullback to value, because if we're entering here and we toss our stop loss here, like there's a very high chance price action might just pull back to that larger crust, like larger, because it's a larger zone. It's not nice and tight, like we sometimes see, like in the wave 3 example, everything's nice and tight, right? The IBO example, everything was nice and tight. So it's not always like that. And it could be fine, right? It doesn't always have to be perfect. But the levels pivot and 0.382 might be a little bit lower, and then there's the EMAs might be a little bit higher, plus some horizontal levels or trend lines and stuff. And we might be like, yeah, you know what, I'll just wait for a pullback to that better value, because I'll have a better stop protection and so on, and a better target too. There's a benefit to waiting for a bigger retracement if possible. But before we dive deeper into that, let's go to our drawing, right? So we did our ABO with a triangle breakout. We did our IBO with a head and shoulder. Let's do the CBO with maybe a range. So let's kind of maybe assume that the 1-hour 50 EMA is like holding pretty fucking solid. Actually, it would have been something different. I'll take the 200, and the 200 EMA will also be like relatively flat in this area. One hour 50 will be accelerating a little bit faster as it starts to approach that 1 hour 200. Right, so it will be something like that. And let's just say, you know, there was price action just kind of, you know, fell and maybe just kind of bottomed a little bit, did some weird price action, maybe a triangle pattern, maybe not, maybe a little range, you know, maybe it had a double bottom, and then all of a sudden it's like news came in and this just broke out of a double bottom. And typically when it's a wave 3, like this case, a lot of times it's news and just causes like this big push, a bullish engulfing on a daily chart, typically on a higher time frame, it's typically like a bullish engulfing. Something happened, it just caused like a big breakout where it pushed above everything, you know. And now this would be a wave 2 pullback, and we'll be looking to capture a wave 3 run, you know, on this. To, you know, we can do obviously our Fibonacci's. So Fibonacci retracement, right? Entry would be somewhere in this valley area, and we can use R1 or S1 for the target placement for 2 to 1, or 0.618 for that 2 to 1. All right, so that would be ideally something like this. And with that, this would be pretty much position sized, same kind of way, you know. So entry around 0.32, give or take a little bit. Stop loss at around 0.618, 1 to 1 to the highs or better, and 2 to 1 up to 0.618 or like R1 pivot or something, you know. And this will be kind of perfect position sizing for a wave 3 CBO. It will look very similar to like this one. Wave 3 CBO looks very similar to an IBO, because an IBO will also kind of be that. But you see it has that 200 EMA, or that 4-hour 50 will be the same. 1 hour 200 or 4-hour 50 is relatively the same level. Whereas with the IBO, we're targeting that 1 hour 200, 4-hour 50 with a CBO that acts as support. So that's a wave 3 CBO, right? Now we can do a wave 5 CBO, which will just look a little bit different. We had an IBO, we had an IBO and price action. Let's tighten this up a little bit. Yeah, so we had an IBO, a wave 1 breakout, we had a wave 2 pullback to value, entry happened. Maybe we had an IBO, right? And then price action ran. It hit, level will be a little bit higher typically. It hit the target area for the IBO and it pushed. It went into what we call like a full wave 3 run up to 1.272 Fibonacci extension, right? So this is like very confirmed. It's looking solid. And now what we're looking for, probably by this point, the EMA on a 1 hour chart started to like accelerate with it, right? So we gotta remember the EMA is a dynamic level, so it should be kind of like curved, right? But I'm just kind of using these trend lines for example purposes. And yeah, everything will start to shift higher. And what we're looking for now is kind of this wave 4 pullback to this confluence area again. And again, it will be a 0.382 Fibonacci retracement, sometimes deeper, sometimes down to 0.618, just depending how the levels line up. The daily pivot will be again kind of like roughly in this area, right? Give or take, typically somewhere closer to 0.382, right? And now we're trying to capture tidy it up a little bit. And now we're trying to capture a move that's again stop protected below 0.618 or around it, entry around 0.382, 1-to-1 to the highs or better, and 2-to-1 should be again at like R1 or 0.618 Fibonacci extension again for 2-to-1 placement, which will typically be fine. It's typically doable. And now you have a wave 5 CBO, right? So we had a wave 1 breakout, wave 2 pullback, wave 3 run, wave 4 pullback, wave 5 run, right? So the wave 3 CBOs are obviously kind of cleaner, but wave 5 CBOs, this is kind of like the last move. There is nothing past wave 5. It could go higher, but once wave 5 happens, like we're done. There's no more trades, right? So this is like a wave 5 CBO. Yeah. So let's quickly go through, check our points here. And right, so wave 3 or wave 5 run that we're trying to capture. So wave 3 CBO, wave 5 CBO, right? It doesn't matter which one. Really, they're both fine. They're both good. Wave 3 is nice. Sometimes wave 5 is nice. They're all nice, typically. If they're proper, they're nice. And they look good. They look clean. Yeah, so 1-to-1 to the lower time frame highs or lows, same as the IBO. 2-to-1 to S1R1 or 0.618 Fibonacci extension or 4-hour 200 EMA. I'll show you that in an example or better, and stop out around 0.618 Fibonacci retracement. So let's have a look at this example here, right? So daily chart, obviously clearly fucking bearish. Like it's moving down, right? It's moving down. We got room to move down to maybe these lows, maybe the EMAs on a daily chart. So it's clear, bearish, room to move. You can probably draw a trend line in here, and it's also breaking that. So it's solid. It's a solid daily. 1 hour chart is had a full wave theory. So wave 1, wave 2, wave 3, and now kind of a deeper wave 4 pullback. You know, sometimes when it comes to the wave theory, when wave 2 is a 0.32 Fibonacci retracement pullback, a lot of times wave 4 will be a little bit deeper. We'll go to 0.618 or roughly in that area. It's called whenever wave 2 pullback is a simple pullback, wave 4 pullback tends to be a little bit deeper and more of a complex pullback, like a rising wedge or something. Not always, but most of the time. That kind of rule comes true. Doesn't really matter though. We still want to have a retracement to the value area, and the value area is again around 0.32 and 0.618. But sometimes we're going to be like, well, a lot of the levels are actually like some more in the middle. It feels a little bit too risky entering here, because if I toss my stop loss up there, I might get tapped out with a high test and just kind of rejecting the EMA. I don't want to get tapped out just because it's rejecting the EMA, the 1 hour 50, the 1 hour 200, which our stop needs to be protected by the 1 hour 200, 1 hour 50. The 1 hour 200 is also the 4 hour 50 top chart here. Our stop needs to be above all these levels. So an entry right here at 0.32 and a stop of 0.618. Well, our stop is not above the 1 hour 200. It's not above the 4 hour 50. It's not protected. It doesn't fit. It doesn't work, right? So in this case, we need to wait for the deeper retracement. If it doesn't happen, no trade, right? But we need to wait for that deeper retracement to more value, because right here, all of a sudden we can protect our stop loss, so we don't have to be stressing. Because if we entered here and our stop loss was at 0.618, we would be stressing, hey, we might get topped out of this position, and it's for no reason, and price action might, and the idea might still work out. We don't want to be tapped out and have the idea still work out. We want to make sure that we're only tapped out when the shit fails, when the idea fails. So in order to do that, we need to make sure we're entering at good values, so our stops are at good values, so our stops are protected by all the levels. You know, so the stop needs to be protected, so that in this case, with this entry, I'm like, well, if the EMAs get rejected, 0.618, 1 hour 200, because it's up here, 4 hour 50 is roughly in the same area. If they get rejected, I should still be fine, you know? And it could have even had a wider stop loss here, it would have fit. Because I was targeting 3 to 1 down to S1. So a lot of times when it retraces farther, you can target more. There's a benefit, you know, but that's only when the levels are kind of wide and spread out. Yeah. So then entry on a trend change, right? And that was right here on a 2 minute. So it was right in a 2 minute trend. Boom, 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 boom. Topped, broke, trend change. Entry on a trend change in the value area. Entry on a micro time frame trend change in the value area. Let's go through the full analysis. Then it dropped, pulled back, dropped. And at that point, it broke the 15-minute trend, and I did P1, clipping the highs, removing half risk, or give or take. Then nothing happened. Price action consolidated, chop, chop, chop. And then on the 15-minute, it broke the lows. And I'm like, okay, I'm going to do P2 and clip the high. Right? You're always clipping a high. Not always, but most of the time when that happens, you're clipping something. So P2, you're just kind of going to break even. Price action pulled back again. Never broke those highs. And then it just smashed right through that 1-to-1. And it just smashed right through it. At this point, I'm just kind of like sitting, waiting, because I can exit manually. The shit's sitting at 1.5, but that was like still on a 1 hour chart, still like right here. So it's a fresh move. It still has a lot of potential. So I'm like, I don't want to shut this down aggressively, but hey, if it breaks out, I can be shutting it for +1. You know, so I'm like watching, see what the fuck happens here. If it breaks out, I'm shutting it down, and hopefully it rejects. And in this case, it didn't even reach, and it started to fall again. So I did P3 and I clipped these highs, locking in a little bit over 1 hour. And then price action came to my 2-to-1, which in this case, 2-to-1 was at the lows, you know? And that's because, again, it retraced a little bit farther, right? So I can get a better entry, better stop, more reward. But my main target, this could have been a 2-to-1. I would have had a wider stop loss and it would have been fine. But you see that 4 hour 200 there? The 4 hour 200 is roughly the daily 50. Not exactly, though. Not exactly. It doesn't fit exactly. But that 4 hour 200, yeah, we want to be targeting above it. So R1 above the 4 hour 200. It won't always be there, but whenever it is, just kind of make sure you're not your target, your main 2-to-1 target is not below it. It needs to be above. But yeah, so it hit that 2-to-1. Well, it kind of missed it. And then it looked like there was some sort of a micro time frame 30-second trend or 1-minute trend I have it marked in. And I exited on that 1-minute trend for 1.5. Simple, clean. So look at the next example. And this is another one. So this is a wave 3 CBO. So this higher time frame had a nice kind of bullish engulfing. Obviously very clear. This is like a higher time frame CBO. You see that? Break and retest on a higher time is literally a higher time frame CBO. 200 EMA, 50 EMA, pivot, everything. And rejected with a bullish engulfing, and now we gave a micro that CBO right here. And it's super clean when that happens, when there's like a higher time frame strategy and a lower time strategy. It's super clean, very powerful setups. But yeah, wave 3 CBO broke all EMAs and then came back for a retest. 1-to-1 to the highs, 2-to-1 up to 0.618. And R1. Yeah, now it's pushing a little bit farther here. Pushing kind of like a wave 3 run to see if it goes up to the highs, because it looked like there was going to be a lot of momentum. So sometimes you can push. If you feel comfortable that, hey, this is going to go higher, just make sure 1R and 2R is proper. And if you feel like you want to push it farther because the momentum is strong, you believe the trend is strong, there's a lot of potential there to kind of trade the full wave 3 up to the full wave 3 target, 1.272, you could if you want to. I'll be talking more about that in level 3, the personalization system. But yeah, this was a limit order versus a market entry. So whenever a setup is this perfect, sometimes I'm just going to place an entry order. In this case, I placed an entry order or a limit order, meaning I just got triggered in when price action hit it. I didn't have to do like a live entry, but there was a live entry right there. Still at value. So price action hit it, trigger me in, ran, and this is a micro time from day trade. So this is actually a 1 hour, 10 minute, 2 minute. Okay. I will be teaching this again in the personalization system for those who are kind of maybe more prefer this setup a little bit more. But it's still the same shit, But this is like seconds. So it hitting one, it never fully kind of breaking trend. I would have potentially been exiting here, but it never did. Because it still had kind of like a lot of potential. And I was probably waiting for like the break of the lows to confirm the trend. And then it just kind of ran and it hit 0.618 R1 and started to reverse, and I was out for 1.9 R. Now this is a micro time frame trade. This lasted 20 minutes. 1 hour, 10 minute, 2 minute, 30 second, 15 second, 5 second. Yeah, I'll chat more about that in level 3, the personalization system. And here's another kind of wave 5 CBO, pretty clear. Daily chart hitting support. Well, let's zoom out first just so you can have a clear look. All right. Daily chart decelerating at support, tweezer bottom, bullish confirmation, and now I'm like, okay, clear bullish GDP up to the tops. Confirming that with the 1 hour, and the 1 hour chart was in this kind of wedge. MACD divergence, bottomed, broke out, wave 1, wave 2, IBO, wave 3 run, wave 4 complex, and targeting wave 5 run. Right, so it kind of smashed, and you see the levels were a little bit spread apart here on a 1 hour chart. Right, so you got pivot 0.32, you got like 1 hour 50 plus the previous highs, and you got the 1 hour 200 and the 4 hour 50 a little bit lower below 0.618. So again, we can't have a stop of 0.618, it needs to be better. So we need to have a better entry if we want the position sizing to fit. So we need to wait for a better entry at value. We cannot enter too early. So it dropped massively on some sort of news. And then eventually it bottomed and had a 2 minute trend change, and I entered right there on the 2 minute trend change after the double bottom broke out. Sometimes people are uncomfortable with that because like the 1 hour chart has this big kind of bearish candle. But it's the trend change. Once you get a trend change, the 1 hour pullback or run has finished. So entry on a trend change right there on that 2 minute. And then again, you can see nothing happened for a little bit. Chop, 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 chop for a few hours. And then eventually gonna push. And on that push, it broke out nicely on a 5 minute, broke out nicely on a 15 minute. And at this point, I'm like, well, yeah, let's do P1. So P1, remove partial risk. Then you see as I did P1 on this 2 minute, price action pulled back from the higher low and then broke out, breaking this high. And that's when I did P2, clipping the low, removing almost all risk. You don't want to be like, if there's a low to clip, you clip the low. You don't have to go exactly break even. Clip the low, it's safer, it's better. So almost all risk removed on that P2. And then you can see smash through 1-to-1. And it's still trending nicely on a 2 minute. It's like a nice 2 minute trend. So as it broke nicely into that profit area, I did P3, clipping this low right there, locking in most of it. And now I'm kind of watching it. If it's breaking down here, I'm exiting manually. Never did. And eventually, I probably should have exited here, but this looks like I was still just kind of sleeping, just getting up. And I was getting up at 5 a.m. before the news at 5:30. So I should have probably exited there for +1, to be honest, because that was like a nice trend change. Yeah, probably should have done that. But maybe I wasn't on the chart. It was just when I'm kind of like waking up. But I was probably like snoozing because I was managing this whole thing. This is overnight, so sometimes I like have a little snooze. For whatever reason, I did not exit there, but I probably should have. And then, yeah, just before news, it was running nicely, and I shut it down right there just manually before news for 1.67. Yeah, cool. Pretty clean, the CBO, right? So decent strategy, very decent strategy. It's either a wave 3 or a wave 5. And yeah, you're going to have a lot of those, a lot of IBOs, a lot of CBOs. Next strategy is strategy 4, the advanced continuation breakout, the ACB, another advanced strategy. So hope you enjoyed this lesson. I'll see you in the next one. Take care.